They say success is the best revenge. Heard they were sleeping again.
The world of cryptocurrency is incredibly exciting. It's like the Wild West out there, with fortunes being made and lost overnight. People from all walks of life are jumping in, hoping to strike it rich. And who can blame them? The stories of early Bitcoin adopters buying Lamborghinis and private islands are incredibly tempting. But this gold rush mentality can be dangerous if you don't know what you're doing. You log onto Twitter and see everyone talking about the latest coin that's about to explode. Your friend from college brags about tripling their money on a meme coin you've never even heard of. The pressure to get in on the action, to not be left behind while everyone else is getting rich, can be overwhelming. This, my friends, is FOMO, the fear of missing out, and it can be a powerful force in the crypto market. But here's the thing about FOMO. It often leads to bad decisions. Decisions made in the heat of the moment, fueled by emotion rather than logic. Decisions that can cost you dearly in the long run. That's why it's crucial to understand what FOMO is, how it affects your trading, and most importantly, how to avoid its pitfalls. FOMO in trading isn't unique to crypto. It's a psychological phenomenon that affects all types of investors, from seasoned Wall Street veterans to first-time stock buyers. It's that feeling of anxiety or unease that arises when you see others profiting from an investment opportunity that you're not a part of. This fear of missing out can lead to impulsive decisions, pushing you to buy or sell assets without proper research or consideration. In the context of crypto, FOMO is often amplified by the market's volatility and the constant hype surrounding new projects. The 24/7 nature of the crypto market, with its constant price fluctuations and news cycles, can be particularly overwhelming. This creates a perfect breeding ground for FOMO, as traders feel compelled to constantly monitor the market and react to every price movement. Imagine this. You've been hearing whispers about a new altcoin with promising technology. You decide to wait it out, do some research, and see how it performs. Then, seemingly overnight, the price explodes. Your Twitter feed is flooded with people celebrating their gains, sharing screenshots of their portfolios, and predicting even bigger gains to come. The logical part of your brain knows that you should stick to your plan, do your due diligence, and not let emotions dictate your actions. But the fear of missing out on life-changing profits whispers in your ear, urging you to jump in before it's too late. This is the power of FOMO, and it can be incredibly difficult to resist. FOMO often leads to buying assets at their peak, just before a potential price correction. This is what's known as buying the top, and it's a surefire way to lose money in the market. Driven by emotion, you ignore the warning signs, disregard your risk tolerance, and end up holding the bag when the inevitable correction occurs. The emotional toll of FOMO-driven trading can be just as damaging as the financial losses. Constantly chasing the next big thing, experiencing the highs of quick profits and the lows of sudden losses can lead to stress, anxiety, and even despair. This emotional roller coaster can take a toll on your well-being and ultimately impact your decision-making, creating a vicious cycle of poor trading choices. The key to successful trading in crypto or any other market lies in finding a balance between logic and emotion. While it's impossible to completely eliminate emotions from trading, it's crucial to develop strategies to manage them effectively. By recognizing the signs of FOMO and implementing techniques to mitigate its influence, you can make more rational decisions and protect your portfolio from costly mistakes. FOMO is deeply rooted in our psychology. As humans, we're social creatures, hardwired to seek connection and belonging. We compare ourselves to others constantly, and when we perceive ourselves as being left behind, it triggers a primal fear of missing out on something valuable or important. This fear is often amplified in situations involving potential rewards, like financial gains. The thought of our peers becoming wealthy while we remain stagnant can be a powerful motivator, pushing us to make irrational decisions in the pursuit of catching up. We convince ourselves that this time it's different, that we can't afford to miss out on this once-in-a-lifetime opportunity. What we often fail to recognize is that this fear-driven decision-making rarely leads to favorable outcomes. When we act out of FOMO, we bypass our usual critical thinking processes, neglecting to conduct proper research or assess risks adequately. We become so fixated on the potential rewards that we blind ourselves to the very real possibility of losses. This is precisely why understanding the psychological underpinnings of FOMO is so crucial for traders. By recognizing the emotional triggers and cognitive biases at play, we can start to develop strategies to counteract their influence on our trading decisions. Herd mentality. Safety in numbers, or a recipe for disaster. FOMO is often exacerbated by what's known as herd mentality, the tendency for individuals to follow the actions of a larger group, even if those actions go against their better judgment. In the context of trading, this can manifest as a rush to buy an asset simply because everyone else is doing so, creating a self-fulfilling prophecy of price increases. This herd behavior is often fueled by a fear of being left out, coupled with the often false reassurance that there must be a good reason why everyone else is buying. We assume that the crowd must know something we don't, and we're afraid of missing out on the perceived easy money. However, as history has shown time and time again, following the herd blindly can lead to disastrous consequences. Market bubbles, fueled by hype and speculation, eventually burst, leaving latecomers holding assets at inflated prices with no one left to sell to. The key to avoiding the pitfalls of herd mentality is to maintain a healthy skepticism and to always do your own research before making any trading decisions. Don't let the fear of missing out cloud your judgment or pressure you into making impulsive moves. Remember, what goes up quickly can come down even faster. Social media's role. Amplifying FOMO in the age of hyperconnectivity. In today's hyperconnected world, social media plays a significant role in amplifying FOMO, particularly in the realm of trading. Platforms like Twitter, Instagram, and YouTube have become breeding grounds for financial influencers, self-proclaimed gurus, and anonymous accounts sharing screenshots of their supposed gains, creating an illusion of effortless wealth and fueling the FOMO fire. The constant bombardment of success stories and insider tips can be overwhelming, making it difficult to distinguish between genuine advice and blatant attempts to manipulate the market or promote specific assets. The fear of missing out on the next big thing is amplified as we witness others seemingly getting rich overnight while we're stuck on the sidelines. It's crucial to remember that social media often presents a distorted view of reality. People are more likely to share their successes than their failures, creating a biased perception of the risks and rewards involved in trading. The seemingly effortless gains displayed online often mask the countless hours of research, analysis, and yes, even losses that go into successful trading. To mitigate the impact of social media on your trading decisions, it's essential to be mindful of the content you consume and to cultivate a healthy sense of skepticism. Remember, what you see online is often a carefully curated highlight reel, not a true reflection of reality. The emotional roller coaster from euphoria to regret in the blink of an eye. FOMO-driven trading can be an emotional roller coaster. The initial rush of excitement as you hit the buy button, fueled by the belief that you're about to be part of the next big thing, can be intoxicating. This euphoria is often short-lived, however, as the reality of the market's volatility sets in. As soon as the price starts to dip, even slightly, doubt creeps in. The fear of missing out is quickly replaced by the fear of losing money. You start to second-guess your decision, questioning whether you made the right call. This anxiety can be debilitating, leading to sleepless nights and constant checking of the market. hoping against hope that the price will rebound. If the price continues to decline, the emotional roller coaster takes another plunge. Despair sets in, followed by regret. You berate yourself for not selling when you had the chance, for letting your emotions get the better of you. The initial excitement of potential profits is replaced by the crushing weight of financial loss, leaving you feeling foolish and defeated. This emotional roller coaster is one of the most damaging aspects of FOMO-driven trading. It's essential to recognize that these emotional swings are a normal part of the trading experience, but they can be managed with the right tools and strategies. The next big thing trap: chasing pumps and riding the hype train. In the world of crypto, there's always a next big thing right around the corner, a new coin promising to revolutionize finance. A groundbreaking project with a celebrity endorsement, a meme coin that defies all logic and skyrockets in value. The allure of these narratives, fueled by social media hype and the promise of quick riches, can be incredibly tempting, particularly for those susceptible to FOMO. You see the charts going vertical, hear the stories of overnight millionaires, and feel that familiar pang of FOMO gnawing at your insides. You tell yourself this time it's different, that you've finally found the golden ticket. You throw money in ignoring the warning signs, blinded by the potential for life-changing profits. But here's the harsh reality. Most of these next big things turn out to be nothing more than fleeting pumps and dumps, orchestrated by whales and insiders looking to capitalize on the FOMO of inexperienced investors. The price skyrockets, drawing in a wave of eager buyers, only to crash down just as quickly, leaving those who bought at the peak holding the bag. The key to avoiding this trap is to approach every next big thing with a healthy dose of skepticism. Don't let the hype and excitement cloud your judgment. Do your own research, understand the fundamentals of the project, and be realistic about the risks involved. Remember, if it sounds too good to be true, it probably is. Social media shilling. When FOMO meets manipulation. Social media has become a breeding ground for manipulation in the crypto space. Accounts with thousands of followers, often anonymous or with unclear motives, promote specific coins or projects, using misleading information and fabricated hype to create a false sense of legitimacy and urgency. These shills prey on the FOMO of inexperienced investors, painting a rosy picture of guaranteed profits and easy money. They use tactics like paid promotions, fake testimonials, and coordinated pump and dump schemes to artificially inflate prices and lure unsuspecting victims into buying at inflated values. The problem is, these influencers often have little to no understanding of the projects they're promoting. They're simply in it for the quick buck, capitalizing on the FOMO and hype to line their own pockets. Once they've dumped their holdings onto unsuspecting buyers, the price crashes, leaving their followers with significant losses. To protect yourself from social media shilling, it's crucial to be discerning about the information you consume. Don't blindly trust everything you see online, even if it comes from an account with a large following. Do your own research, verify information from multiple sources, and be wary of any claims that seem too good to be true. Fear-based selling, panic selling, and the domino effect. Just as FOMO can drive impulsive buying, it can also lead to irrational selling decisions. When the market takes a downturn and prices start to plummet, the fear of missing out on the upside is replaced by the fear of losing everything. This fear can be contagious, spreading like wildfire through the market and triggering a domino effect of panic selling. You see the charts plummeting, or hear the news reports of a market crash and witness your portfolio value shrinking by the minute. The fear takes over, overriding any logical reasoning or long-term investment strategy you may have had. You hit the sell button, desperate to salvage what's left, even if it means selling at a significant loss. This panic selling often leads to further price declines, creating a self-fulfilling prophecy of fear and losses. The problem is, when everyone is selling, there are very few buyers left to absorb the selling pressure, leading to a downward spiral that can be difficult to reverse. The key to avoiding panic selling is to have a clear investment plan and to stick to it, even when the market gets turbulent. Remember why you invested in the first place, assess your risk tolerance, and don't let fear dictate your actions. Sometimes, the best course of action is to do nothing and ride out the storm. Ignoring fundamentals. The allure of shiny objects and empty promises. The world of crypto is full of shiny objects and bold promises. Projects claiming to solve complex problems, offering revolutionary technologies, and guaranteeing astronomical returns. It's easy to get caught up in the excitement and FOMO, especially when everyone around you seems to be getting rich. However, beneath the surface of these enticing narratives often lies a lack of substance, a disconnect between promises and reality. Many projects lack clear use cases, rely on hype rather than tangible results, and are driven by speculation rather than fundamental value. When FOMO takes over, we tend to overlook these critical details. We ignore the warning signs, dismiss the skeptics, and convince ourselves that this time it's different. We fail to ask the tough questions, conduct thorough research, and assess the viability of the project's long-term prospects. The antidote to this trap is simple but often overlooked. Focus on fundamentals. Before investing in any project, take the time to understand its underlying technology, its use case, its team, and its long-term vision. Don't be swayed by hype or promises of quick riches. Remember, sustainable success in the crypto market, as in any market, is built on solid foundations. Revenge trading. Doubling down on mistakes. One of the most dangerous consequences of FOMO-driven trading is the tendency to engage in what's known as revenge trading. This occurs when, after experiencing a loss, often due to a FOMO-induced decision, a trader tries to recoup their losses quickly by making even riskier trades, driven by a desire for immediate gratification and a refusal to accept the initial loss. This emotional state of frustration and the need to get even with the market clouds judgment and leads to impulsive decisions. Instead of taking a step back, analyzing the situation rationally and adjusting their strategy accordingly, revenge traders often double down on their mistakes, increasing their risk exposure and setting themselves up for even greater losses. This vicious cycle of chasing losses can be financially and emotionally devastating. It's essential to recognize that trading is not a get-rich-quick scheme, and that losses are a part of the game. The key to long-term success is to manage risk effectively, learn from your mistakes, and approach trading with a disciplined and rational mindset. If you find yourself feeling the urge to revenge trade, take a step back from the market. Give yourself time to cool off, reassess your strategy, and seek advice from a trusted mentor or financial advisor. Remember, chasing losses rarely leads to positive outcomes. Tame the FOMO beast. Strategies for rational decision-making. We've all been there. You're scrolling through Twitter, and suddenly everyone is talking about this hot new altcoin. It's up 200% in a week, and people are sharing screenshots of their massive gains. Your palms start to sweat, your heart races, and you feel that familiar pull. The FOMO monster is rearing its ugly head. But hold on. Before you hit that buy button, take a deep breath, and remember, FOMO thrives on impulse and emotion, while successful trading requires a cool head and a rational approach. It's time to fight fire with fire, or in this case, FOMO with logic. The first step to taming the FOMO beast is to acknowledge its presence, recognize those physical and emotional cues, the racing heart, the sweaty palms, the feeling of urgency, and use them as a signal to slow down and assess the situation objectively. Ask yourself, am I truly interested in this asset, or am I just caught up in the hype? Next, shift your focus from short-term gains to long-term goals. Remember why you started trading in the first place. Was it to get rich quick? Or was it to build a solid financial future? Instead of chasing pumps and dumps, focus on identifying assets with real potential and a solid foundation for growth. The power of patience. Sticking to your plan in a volatile market. The crypto market is like a roller coaster, thrilling highs, gut-wrenching lows, and unexpected twists and turns at every corner. It's easy to get caught up in the excitement, to chase the green candles and make impulsive decisions based on fear or greed. But here's the secret. Sometimes the most profitable move is no move at all. Before you even think about buying your first Satoshi, create a solid trading plan, determine your risk tolerance, set realistic profit targets, and establish clear entry and exit points for your trades. Write it down, stick to it, and avoid making emotional decisions on the fly. Remember, patience is not about waiting for prices to go up. It's about waiting for the right opportunities to present themselves according to your predefined plan. It's about resisting the urge to chase every pump and dump, to avoid buying into the hype, and to stay focused on your long-term goals. The crypto market is a marathon, not a sprint. By mastering the art of patience, you'll be better equipped to weather the storms, avoid costly mistakes, and come out ahead in the long run. Risk Management 101. Protecting your portfolio from yourself and FOMO. Let's face it, even the most seasoned traders fall prey to FOMO from time to time. But here's the good news. You can't eliminate emotions entirely, but you can control how they impact your trading decisions. And the key to that control is risk management. Think of risk management as your financial seatbelt. You wouldn't drive a car without buckling up, would you? In the same way, you should never enter a trade without first determining how much you're willing to lose. Set stop-loss orders to automatically sell your assets if the price drops below a certain threshold, limiting your potential downside. Diversification is another crucial aspect of risk management. Don't put all your eggs in one basket, especially in a volatile market like crypto. Spread your investments across different assets, sectors, and even trading strategies to reduce your exposure to any single event or market downturn. Remember, risk management is not about eliminating risk entirely. It's about understanding and mitigating the risks you're taking. It's about protecting your capital from the inevitable emotional swings and impulsive decisions that FOMO can trigger. Information overload. Curating your crypto news, diet for clarity. In the age of 24/7 news cycles and social media frenzy, it's easy to get sucked into the vortex of crypto information overload. Every tweet, every YouTube video, every online article seems to scream, buy now or miss out. But remember, not all information is created equal, and too much noise can drown out the signals you need to make sound trading decisions. Start by curating your sources wisely. Identify reputable news outlets, industry experts, and analysts with a track record of providing accurate and insightful information. Unfollow or mute accounts that consistently promote hype, FOMO, or get-rich-quick schemes. Instead of constantly chasing the latest headlines, focus on developing a deeper understanding of the underlying technology, market trends, and economic factors that drive the crypto market. This will equip you with the knowledge and context you need to filter out the noise and make more informed decisions. Remember, knowledge is power, especially in the world of trading. By being selective about the information you consume, you can cut through the clutter, reduce FOMO, and gain a clear perspective on the market. Seeking guidance. When to call in the reinforcements, mentors, and more. Trading can be a solitary endeavor, but it doesn't have to be. Seeking guidance from experienced traders, mentors, or financial advisors can provide invaluable support, perspective, and accountability. especially when you're battling the emotional roller coaster of FOMO. A mentor can offer insights based on their own experiences, help you develop a personalized trading plan, and provide objective feedback on your trades, helping you learn from your mistakes and refine your strategies. They can also act as a sounding board, challenging your assumptions and helping you stay grounded when FOMO threatens to cloud your judgment. Don't be afraid to join online communities, attend webinars, or participate in trading forums to connect with other traders, exchange ideas, and learn from their collective wisdom. Remember, you don't have to navigate the complexities of the crypto market alone. Seeking guidance is not a sign of weakness, but a sign of strength and a commitment to continuous learning and improvement. By surrounding yourself with a supportive network of experienced individuals, you can gain valuable insights, avoid costly mistakes, and navigate the world of crypto trading with greater confidence and clarity. The dot-com bubble? A cautionary tale of FOMO and herd mentality. Let's rewind the clock back to the late 1990s, the era of dial-up internet and the dot-com boom. The internet was the new frontier, a digital gold rush where fortunes were being made seemingly overnight. Companies with .com in their names, regardless of their actual business models or profitability, were attracting massive investments, fueled by a potent cocktail of FOMO and herd mentality. Investors, both seasoned and novice, were blinded by the hype, pouring their savings into tech stocks with little regard for traditional valuation metrics. Everyone was convinced that this time was different, that the internet had fundamentally changed the rules of the game, and that missing out on this once-in-a-lifetime opportunity was simply unthinkable. The bubble, however, as all bubbles do, eventually burst. Companies built on hype and speculation, with little underlying value, crumbled. Stock prices plummeted, wiping out billions of dollars in wealth and leaving countless investors financially devastated. The dot-com crash served as a harsh reminder that even in the face of technological disruption, the fundamental principles of investing still apply. While the technology and market dynamics may have changed, the psychological drivers of FOMO remain the same. The dot-com bubble serves as a cautionary tale of what can happen when fear and greed overshadow rational decision-making in the pursuit of quick riches. The rise and fall of Luna. When hype and lack of fundamentals collide. Fast forward to 2022, and the world witnessed another stark example of FOMO and the dangers of ignoring fundamentals in the crypto space. The implosion of Terra, Luna, and its algorithmic stablecoin, Terra USD, UST. Luna, once hailed as a revolutionary project with its promise of a decentralized stablecoin ecosystem, attracted billions of dollars in investment, fueled by a combination of technological innovation, aggressive marketing, and a fervent community of believers. However, beneath the surface of this hype lay a complex and ultimately unsustainable algorithmic mechanism that proved vulnerable to market forces. When the market experienced a downturn and UST lost its peg to the US dollar, the entire ecosystem unraveled. Luna's price plummeted to near zero, wiping out the savings of countless investors who had bought into the hype without fully understanding the underlying risks. The Luna debacle serves as a stark reminder that even in the world of decentralized finance, hype and speculative bubbles can have devastating consequences. It underscores the importance of thorough research, understanding the underlying technology and its limitations, and approaching investments with a healthy dose of skepticism, especially when promises of high returns seem too good to be true. The meme coin mania. A roller coaster ride of FOMO and speculation. Meme coins, inspired by internet memes and fueled by social media hype, have taken the crypto world by storm, captivating the attention of both seasoned traders and curious newcomers. Driven by a combination of FOMO, community-driven speculation, and the allure of getting in on the joke, meme coins have experienced astonishing price swings, creating both overnight millionaires and heartbreaking losses. While some view meme coins as harmless fun, a speculative sideshow in the broader crypto landscape, their volatile nature and susceptibility to market manipulation pose significant risks, particularly for inexperienced investors prone to FOMO-driven decisions. The meme coin phenomenon highlights the power of social media in shaping market sentiment and the ease with which FOMO can drive irrational behavior. It serves as a reminder that even in the decentralized world of crypto, where traditional financial institutions hold less sway, herd mentality and emotional decision-making can lead to both exhilarating gains and devastating losses. The Bitcoin halving hype, managing expectations and avoiding emotional trading. Bitcoin halving, a pre-programmed event that occurs approximately every 4 years, reducing the rate at which new Bitcoins are created, has historically been a period of heightened market volatility and FOMO. The anticipation of reduced supply and its potential impact on price often leads to speculative buying frenzies, fueled by media hype and predictions of parabolic price surges. While Bitcoin halvings have historically preceded periods of significant price appreciation, it's essential to approach these events with a balanced perspective and avoid making impulsive decisions based solely on hype and FOMO. Market cycles are influenced by a multitude of factors, and past performance is not indicative of future results. Instead of getting caught up in the emotional roller coaster of having hype, focus on developing a sound trading strategy based on your individual risk tolerance, financial goals, and a nuanced understanding of the market dynamics. Remember, the key to successful trading lies in managing your emotions effectively, staying informed, and making rational decisions based on logic and analysis rather than succumbing to the pressures of FOMO and short-term market fluctuations. Learning from the mistakes of others and yourself, turning FOMO into wisdom. The crypto market is a relentless teacher, offering both exhilarating highs and humbling lows. Every trade, every market cycle, every instance of FOMO, whether it leads to profits or losses, presents a valuable opportunity for learning and growth. Instead of viewing losses as failures, embrace them as tuition fees, as valuable lessons learned in the ever-evolving game of trading. Analyze your past trades, identify the emotional triggers and cognitive biases that influenced your decisions, and develop strategies to mitigate their impact in the future. Engage with the crypto community, share your experiences, and learn from the mistakes and successes of others. Participate in online forums, attend webinars, and connect with experienced traders who can offer guidance and mentorship on your trading journey. Remember, the path to becoming a successful trader is paved with both triumphs and setbacks. By embracing a growth mindset, learning from your mistakes and the mistakes of others, and turning FOMO into fuel for wisdom, you can navigate the exciting and challenging world of crypto trading with greater confidence, resilience, and ultimately greater success. Mastering your emotions, mastering the market. The key takeaways. So there you have it. We've journeyed through the exhilarating and sometimes treacherous terrain of the crypto market, exploring the powerful force of FOMO and its potential impact on your trading decisions. Remember, FOMO is not unique to crypto. It's a human emotion that affects us all, from Wall Street veterans to first-time investors. We've seen how FOMO can lead to impulsive buying at the peak of hype cycles, blind faith in social media gurus, and the gut-wrenching agony of panic selling. But more importantly, We've armed ourselves with the knowledge and strategies to tame this emotional beast and make more rational, informed decisions. Remember, successful trading is not about eliminating emotions entirely. It's about understanding their influence and developing strategies to manage them effectively. It's about shifting your focus from short-term gains to long-term goals, from chasing hype to embracing fundamentals, from following the herd to charting your own course. The future of trading. Embracing technology, but not forgetting humanity. The world of trading is evolving at an unprecedented pace. Artificial intelligence, machine learning, and advanced trading algorithms are transforming the way we analyze data, execute trades, and manage risk. Embrace these technological advancements, leverage the tools at your disposal, but never forget the human element at the heart of every trading decision. Cultivate emotional intelligence alongside your trading skills. Master the art of self-awareness, recognizing your own emotional triggers and biases. Develop discipline and patience, the ability to stick to your plan amidst the market's inevitable ups and downs. Remember, the most sophisticated trading algorithm cannot replicate the power of human intuition, the ability to adapt to unforeseen events, and the wisdom gained through experience. As you navigate the exciting future of trading, let technology empower, not overpower, your decision-making. The crypto market, with all its volatility and potential, offers a unique opportunity to test your skills, challenge your assumptions, and ultimately master the game of trading, both financially and emotionally. So go forth, trade wisely, and may the odds be ever in your favor.
They'll run it from the gun. And they'll stop him after a minimal pickup. The offense gets a quick timeout at this point. Every second is precious.
And it's just simple. Simple first down run, showing your physicality, setting your offense up in a good spot.
Looking to throw on second down. Grabbed over the middle. It's Ibuka. He's close to the first down, but they're going to mark him just a little short. Really need to use this tempo effectively and get a little closer for the kicker. Fast motion from the offense. Wants to throw on third down. And the incomplete pass will bring up fourth down.
It is go time. What is in your bag? What is your play call? Going to be fourth down now. I have to have this. I'm trailing. This is what every quarterback dreamed about in their backyard, making that play in a big-time moment. It's go time.
And here we go. Down a score. They'll go for it on fourth down. Tackled after picking up the first down. Timeout is called. Clock stops. 13 seconds to go in the game.
You know, you go for it on 4th and inches in this fringe area of the field in your opponent's territory. I'd be curious to see if on the next play now, they're going to try and take a shot and see if they can catch the defense sleeping.
That one will be incomplete, and we are down to 10 seconds to go.
It's hard throwing in the pocket, man. You got bodies and 300-pound dudes falling all over the place. They're trying to hit you. That time, the pressure got to him, and it forced the incompletion.
He's got him this time. He's run out of bounds, but a big play on that one, and it'll be a first down. A huge pressurized kick coming right now as this game hangs in the balance. They'll use the timeout. 6 seconds left on the clock. And the line of scrimmage is the 30. That'll leave them a 47-yard attempt and a chance to win the game. No good. And with that miss, still down by a deuce and missing an opportunity to take the lead.
Man, there is nothing worse in the world than that feeling right there. Missing a field goal when your team needs it the most. That's what you do. You're a kicker. You're supposed to make those. Man, oh man, Palmer, that sting.
He's going to carry that miss for a long time too, David. Obviously, the offense and the team put him in a position to